Yes.
Hi, Jared. Thanks for joining me again. Great. Now, today we're going to talk about what to do and what not to do during the loan process, even leading up to wanting to apply for a loan. So, if you don't mind to help us out with that.
Not at all. This is the biggest purchase of your life. You may have, you know, 4 or 5 or more purchases of a home, but this is, the big one. So you don't want to do anything to jeopardize that. During the process of buying the home, after you get pre-approved, before you get pre-approved, this should be the only thing that is priority number one. So you don't want to get approved and then go buy a new car because that's going to affect your debt to income ratio. You don't want to be late on any payments to where your credit gets hurt.
Right.
What you want to do is just pretty much stay status quo. Don't do anything to jeopardize, and then you'll be fine. Once you get that pre-approval from the lender, then you're pretty much good to go unless you do something that's going to jeopardize that, such as taking out new debt or a personal loan or something that's going to cause the debt to income ratio to change, and then having the underwriters to re-pull credit and then review the file again. That's the
Well,
base.
let's go over those new lines of credit. And I kind of tease, but I'm very sincere when I say 90 days, same as cash on furniture. That's a new line of credit.
Right.
20% off Kohl's at the counter. That's a new line of credit. So, none of that.
None of that.
Okay, so that's a great reminder to potential buyers and those wanting to prepare themselves for the buying process. So we will have a list of other do's and don'ts. Oh, talk about the job. Make sure you don't switch jobs. We go over
Oh,
that.
absolutely. If you do happen to change jobs, I mean, that can be fine, but if you take a cut back in pay, they will have to review that because they will do a verification of employment about a week before closing to make sure that you're still with that employer. And if that employer says that you are not, then that could change things pretty dramatically, um, especially if you do lose a job. But if you do change a job, sometimes that can affect your salary, which would have to be re-underwritten. So yeah, if anything like that happens, it could cause damage.
Okay, well, great. Those are great reminders, and we will have a list in the description. And I'm going to have a link about talking about ratios. We'll probably get into another video about that, but I will have a link to a document talking about mortgage ratios and how to calculate those. So, again, Jared, I certainly appreciate it. And as always, look forward to working with you.
Yes, ma'am. I look forward to the next one.